Alrighty. Welcome to the Office of Economic Empowerment's Money Talk Tuesday, Buying a Home, presented by MassHousing. We have Angelo Nuby with us today. This is our little quick agenda, what we're going to go through with this slide deck. I'm going to go through about the Office of Economic Empowerment, disclosures, go over housekeeping, and then I'll introduce our speaker for this afternoon. And just as a reminder, we will be getting to the questions and answers portions towards the end of this presentation. So we'll get into that in the housekeeping, and then we'll have that one exit poll right before you leave. So about the Office of Economic Empowerment, the Office of Economic Empowerment is a department within the Office of the Treasurer and Receiver General of Massachusetts, tasked with supporting, advocating, and facilitating policies that empower all Massachusetts residents. Our programs serve women, families, high school students, veterans, and seniors. Our priorities include closing the wage gap, increasing access to financial education, improving college affordability, and investing in STEM careers and education. As far as disclosures, this is a Zoom webinar and will be recorded. The recording will be uploaded onto a public website for future use. The webinar is also being streamed live on Facebook. Any information shared through this questions function will be anonymous. Please note, however, that the chat record is subject to public record law and as such is not anonymous. As far as housekeeping, again, this is a webinar, not a meeting, so you won't be able to see other participants. The host, myself and or Angelo, can call on participants to answer questions. You can also use the chat feature to communicate to the host and the panelists. Q&As will be available throughout the webinar, but as a reminder, we won't be answering them until the end of the webinar. So please stick around for that. And then please complete the exit poll, because that gives us feedback to improve these things and also is your opportunity to suggest other ideas for other money talks you want to hear about. And finally, join us in August. We will be working with People's United Bank to present the Senior Fraud and Scam Prevention webinar. You can register at the bit.ly in the invitation. I will also drop that in the chat in just a moment. And otherwise, if you have any other Money Talk questions or comments, you can email us at moneytalk@tre.state.ma.us. This is also on Facebook, so feel free to find it and share it for us. Like our Facebook page, stay up to date. And then without further ado, I'm going to hand it off to Mr. Angelo Nuby.
Well, thank you and good afternoon, everyone. I hope everyone has grabbed their lunch and is ready to go. I want to thank the Office of Economic Empowerment for producing this particular program on buying a home. And in a moment, we're going to place our slide deck up, and we'll start with some information regarding buying a home. And there will be some website information also that we're making available, so that you're able to go out and look at other resources across the state. And then if there are any questions, certainly you can follow up with me at a later time via email or via the phone. So it's going to take a moment, I think, for Shatia to get the slide deck up and running. But while that is happening, I'll give you a little bit of information about myself and MassHousing. I've been with MassHousing now. I'm starting my 13th year. My background is in mortgage underwriting, mortgage retail banking, and small commercial lending. MassHousing, as an agency, is a nonprofit. It's self-sustaining, and the mission is to produce programs for low and moderate income individuals across the state so that you're able to either buy a home, refinance a home, or actually sell a home and buy up. We have several products that I'll be going over in the next hour, and I think there'll be an opportunity for you to really get a better view as to what MassHousing as an agency can offer across the state. And not only can we do refinancing, but we also have the option of doing lead paint loans if you've got issues with lead paint, septic loans, Our menu is fairly vast. We're just still waiting for the slide deck to pop up. We have not seen that at this point. But a little bit more about MassHousing in that we are a statewide organization. You cannot.
Excuse me, Angelo.
No.
Are you seeing the?
I'm not seeing the slide deck. No.
Okay. Just give me one moment. I'm sharing it, but I don't think we can see it. 1 second. I can't see you.
I can only see myself.
Okay. I'm wondering if our members, our attendees can hear you well.
Okay. Maybe I've been speaking for. They're probably like, "What's that guy? He's moving his mouth, but there's nothing coming out."
Apparently, you guys can see the slides, but Angelo, you can't.
No, I cannot. But that's if you can tell me what slide we're on, I can kind of I put together the deck so I kind of know where we are. So if I cannot see the slide, that's not a big issue. If you could go to actually then slide 2 and just let me know when that's up.
All right, you're up.
Okay, so MassHousing has a myriad of options available to you as a home buyer. And again, our products are available across the state. We are a nonprofit. We're self-sustaining. We do not use taxpayer money for any of our products, so you don't have to worry about that issue. One of the things that I always start off these classes with, these workshops, is saying that buying a home is still the #1 way to build wealth in this country. Whether you're planning for your children's education, whether you're planning in the future for retirement, owning a home, getting the benefits from owning a home from a tax perspective, from a family perspective, from a safety perspective for the family, is still one of the best ways to build wealth in Massachusetts, or actually anywhere in the across the country. The next slide, please. So this next slide is for our first-time home buyer program. And in many cases, what most of you are probably thinking, okay, well, I'm looking to buy my first home. What are the steps? What do I need to ask? Who do I need to ask? Where do I need to go? And the first step is always to take a step back and determine, one, where do you want to live? What type of property are you interested in purchasing? And have you educated yourself as to what programs are available? So with MassHousing and many programs for low and moderate income individuals across the Commonwealth, you have to take a first-time homebuyer class. And there are several organizations, nonprofits across the state that MassHousing works with. These are our partners, and there are about 63, 64 of them. And what they do is produce first-time homebuyer classes. And you have the option of either doing a face-to-face class or doing a class online, or a combination thereof. There are hybrid classes that are also available to you. When you sit down at this class, you're going to go through anywhere from between 8 and 12 hours of class time, and anywhere from, say, 3 to 4 days. Depending on the structure of the class. You will hear from a loan officer who will give you considerably more detail about our programs and other programs that are available. You will hear from a real estate attorney that will give you the ins and outs of the legal process that you will go through and the types of documents that you'll be signing at closing. You will hear from a home inspector, who is very, very important, of course. One of the things that's happening right now across the state is that property values are going up so quickly that many people are thinking, well, I'm going to try and make my offer better than the next person, better than the next family. So what I'm going to do is I'm going to waive the fact that we have to do a home inspection. Don't do that. you want that home inspection done. What you don't want to do is buy a property because you think that you really need to jump into the property and not be aware of some of the issues that may cost you a significant amount of your resources down the line. And not only that, the aggravation of that. So don't waive the home inspection. Make sure that you have a home inspection done. The realtor or real estate agent that you're going to deal with, because there are several options within that area, and you're building a team. And what I'm trying to say is you're building a team. You're going to have the loan officer who is going to give you detail on the loan product. You're going to have the home inspector who is going to tell you whether or not there are any issues with the home you're about to purchase. You're going to be working with a facilitator or a counselor who's producing the class, who will tell you about resources that are available to you to help you make that purchase. And so you want to build that team. And in some cases, you'll also hear from an appraiser. Some of the classes do have appraisers who come to and talk a little bit about the types of properties that are available. So, but as a first-time home buyer, our first-time home buyer program, as you can see with the screen on the left, we have different income guidelines. And the income guidelines are based on where you're going to live, not where you're currently living, but where you're considering purchasing your home. And as you can see, we have the income guidelines that are not based on family size. These income guidelines are based on the individual or individuals who will be purchasing the home. So we're not concerned with that you've got 5 people or 10 people in the home, that in some cases you may have in-laws, you may have your parents, grandparents, children who are of age, over 18, who are earning income. And in some programs, all of that income is rolled into what's known as the compliance income for the loan. With MassHousing, we don't do that. We're only concerned with the individual who is going to be on the mortgage. So what does that mean? That means that you could have 2 people and that earn $200,000. And if you look at our income guidelines, you may say, oh, well, I'm over income. What am I supposed to do? Well, if one person has the income and has the credit to support the mortgage, you can just have that single person on the loan. So that's one of the big differences that you're going to find with MassHousing. But there are other programs that are out there. And when you sit down with that loan officer or that counselor, they are going to give you details about purchasing a home and some of the income guidelines that go with that and other underwriting guidelines. Down payment and closing cost assistance. We know that one of the biggest obstacles to many families in purchasing a home in Massachusetts is the fact that the prices of the homes are increasing prohibitively, unfortunately, in some cases. And so what we want to do is to try and minimize that effect. And the way we do that is offer down payment and closing cost assistance that you can use to purchase your home and or pay your closing cost. And the DPA program, or down payment assistance program for first-time home buyers, it's up to 3% of your down payment or $15,000, whichever is less. And you can use this program when you qualify to purchase a single family, a condominium, a 2, 3, or 4 family. And that's one of the changes with MassHousing, in that we offer programs for 2, 3s, and 4 families. I mentioned earlier that you have to take a first-time homebuyer class for our programs. If you are considering purchasing a multifamily, you will need to take a second class known as landlord training. And this is so that we're sure that you're prepared to not only become a homeowner, but become a property manager. And especially with all of the changes in the laws that are going on, we want you to be prepared so we know and you know what you can or can't do and you can or can't say as a landlord. So there is that different layer that you will have to be concerned about. So for first-time home buyers, as you can see by the income, it goes by county. This program is for single families, condominiums, twos, threes, and fours. If you're thinking about putting down, buying a multifamily, it will take at least 3% of your own money. So you can still get some down payment assistance from us, but it takes 3% of your own money. And also, if you notice on the bottom left-hand corner, we have credit scores. The credit scores will vary based on the type of product you're interested in. So, our lowest credit score is 640. And so if you're interested in using an FHA product, we allow the credit score to go to 640. If you're looking at purchasing a 2, 3, or 4 family, the minimum credit score for a 2 family is 680, and the minimum credit score for a 3 or 4 family is a 700. Next slide, please. So I said that we had several products that are available, and I'm assuming we're on the next slide now, which is our MassHousing mortgage. So the MassHousing mortgage, as you can see, has the highest income limits of any program across the Commonwealth. And the same applies. We do not look at family size. We're looking at the individuals who will be on the mortgage. With this particular program, you do not have to be a first-time homebuyer. So remember I said that we have, there's a myriad of products that are out there. And one of the things that I have to say, I'm talking about MassHousing, but I'm going to intersperse information about other products that are out there, because you will hear loan offers talk about portfolio products. And what a portfolio product is when and usually these are offered by local lenders, local banks, community lenders, credit unions. These are products that, especially for first-time homebuyers, but not always, that they offer some flexibility in their underwriting guidelines, because it's a portfolio product, meaning that they're going to retain that loan. They're not going to sell it onto the open market. They're going to keep it in their books, which means that maybe they may ask you to put a little bit more down, but maybe they allow your credit score to be a little bit more flexible. There's flexibilities that generally are built into portfolio loans. So you will hear a loan officer maybe say, well, we have some challenges with you on a particular type of loan, but my institution offers a portfolio loan, which is a little bit more flexible, and maybe we can do something there. So that's a portfolio loan. Also, with any of these products, as a first-time home buyer and with the affordability of purchasing a home an issue right now, many consumers are looking at what is known as lottery properties or affordable properties. These are properties that are across the state, and one of the resources that we're giving you is an organization called CHAPA, Citizens Housing and Planning Agents Association. They have a website, and they have information regarding homebuyer classes pretty much across the state. Also, properties that are available via lottery. And what a lottery property is essentially a property that would normally be selling for, I'm just going to give you an example of, say, $600,000. But because it needs to stay affordable, it may be selling at $400,000 or $350,000. And these are single families, condominiums, and multifamilies. And the properties are kept affordable. They're kept affordable in perpetuity, meaning forever, so that even if later on you decide you want to sell the property, you sell to another family, they have to fall under certain guidelines. They can buy the property and it stays affordable so it can be passed on. So you can't take all the equity. But the point is giving you an opportunity to maybe stay in a community that you grew up, or maybe stay in a community where you have to reside because of your work, and or maybe you want to raise your children and educate them in a particular community. The cost is prohibitive, so there is an affordable property, a lottery property. MassHousing and other agencies will do those properties. They're called deed restricted properties. And there's another website called My Mass Mortgage, and there is another organization called MHP, or MassHousing Partnership, which is a sister agency to MassHousing, and they have some information also. As part of this particular slide also, you see that we offer FHA. FHA is a subsidized product which is supported by the government. If you have any credit challenges, maybe you've had a foreclosure in the past, maybe you've had a bankruptcy in the past, your credit isn't what it should be, you want to buy a home, we offer a product called FHA. You cannot use down payment assistance with it at this time, but it is an option for you if you have some of those challenges. But just realize that with risk from the lender's perspective, and if you've had some challenges, the loan may be more costly over the life of the loan. You will pay mortgage insurance for the life of the loan, regardless of what your equity position is. Next slide, please. So the next slide, I'm going to talk a little bit about a program that was developed just as COVID hit, just as the pandemic hit. It's called Workforce Advantage. This is a program that is specifically targeting the 26 gateway cities in Massachusetts. And if actually if you could move to the next slide for me, please, and I'll just continue to speak. But on this next slide, you will see a map of the Commonwealth of Massachusetts. And you have this 26 gateway cities, 26 gateway cities indicated. So Workforce Advantage, what does this program do? Well, Workforce Advantage is looking to assist those individuals at 80% or less of area median income. So 80% or less of area median income. So the income guidelines are a little bit less, so in some cases significantly less than the first two programs that I spoke of, but it gives you the opportunity to buy a single family or a condominium only, so single family or condominium only, earn less than 80% of area median income, purchase in one of the gateway cities, and here are some of the other benefits to this particular program. One, we do have down payment and closing cost assistance available. 3% or $15,000, whichever is less. And in the case of Workforce Advantage, it's 1% interest over 15 years. So our first-time homebuyer program had down payment and closing cost assistance available, but it was at 2% interest over 15 years. So there's a little bit of a discount. And what that means in real numbers is about $86, $87 per month added onto your mortgage payment. But there is also about 1/8% discount in your interest rate. So for those who qualify, this is a really, really good program. 26 gateway cities, check those out. And also remember, with MassHousing's down payment and closing cost assistance, there are other resources that are out there. And I think one that I'm sorry that I missed was the Federal Home Loan Bank. The Federal Home Loan Bank has a product known as Equity Builder. And Equity Builder is a grant program and it only comes out twice a year, so you really do have to check with your local lenders. But it comes out twice a year, and there's grant money that will assist you in purchasing your home. And if you stay in your property for a certain amount of time, it's forgiven. So there is a time requirement, but it's forgiven after a certain amount of time. You can use MassHousing's down payment and closing cost assistance in conjunction with other local resources. And one of those resources is the Equity Builder. So the Equity Builder can be used in conjunction with MassHousing's DPA program. And in many cases, depending on where you're thinking about residing, there will be other resources that might be available to you. So I know we're on the slide that has the map. So next, I'd like to move to the next slide. And I believe the next slide is Operation Welcome Home. So for those of you, hopefully we have, and possibly we have individuals who are in the service who have served. And when I say military service, this is National Guard, Coast Guard, reservists, Gold Star family members. So you don't necessarily have to be a veteran in order to utilize this program. And one of the kind of unknown things about VA loans. And VA loans are a very good loan. And if you're a veteran and you have the opportunity to use a VA loan, there are some incentives that go along with that loan, up to $26,000 in resources that can be made available to you. But a little story, I have a sister-in-law and brother-in-law who were in the military. They're in the Air Force together, going back until the early 80s. Well, when they both, after doing 20 years in the military and they were ready to buy their first home, if they were looking at a VA loan, they had to be married. So in order to utilize a VA loan, you have to be married. Well, at the time they weren't. So of course they said, well, we want to buy a home. We want to use our VA benefits. They were planning on getting married, so they did, and that was great for them. But, fast forward, 35 years later, we wanted to come up with a product to assist our service members, but did not require that you had to be married. So with MassHousing, we have a product that can utilize all of the other benefits that I've spoken about. We have, down payment and closing cost assistance for this particular product. You can buy a single family, a condominium, or 2 or 3 or 4 family. So there's an opportunity to utilize all of our products at one point or another, and be a service member or a Growth Star family member. The biggest benefit that comes along with this particular product, that at closing, we will credit you $2,500. So when your closing documents come out from the loan officer and they say, okay, we're ready to close, the closing costs are going to be $7,500. When you're sitting at that closing, you will realize a $2,500 credit back to you, and that is from MassHousing. And that does not have to be paid. That's a grant. So for any of you who are service members, or any of you who may have a family member who is a service member, National Guard reservist, Coast Guard, this is a great product, and I think there's some extra benefits that can be layered onto this particular product. And also remember, utilizing this product does not require you from a future date utilizing your VA loan benefits. So you are able to utilize your VA loan benefits at a later period, even though you may take on this loan now. And because remember earlier in the conversation, I said that MassHousing is a little bit different than other housing finance agencies because we have such a myriad of products available. And one of those is the fact that you don't have to be a first-time home buyer. You can refinance with MassHousing, and you can also sell your home on Monday, and on Tuesday buy another home and utilize a MassHousing product. So, and something to think about. What constitutes a first-time home buyer? And there are many programs that say, well, if you're a first-time home buyer, that means that you could have never owned a home ever in the past. And that's true with some programs. They will say you could have never owned a home anytime in the past. And in fact, anyone who is going to be living with you couldn't have owned a home. Well, we're not that restrictive. With MassHousing and many other programs, you are designated as a first-time home buyer if you have not owned a home in the last 3 years. So you could have lived in another state, California, Chicago, Florida, wherever, sold a home 3-4 years ago, moved to Massachusetts, you're working here now, you're ready to go, you're considering buying a home, you could actually qualify for our first-time home buyer program because you have not owned a home or had an interest in a home in the last 3 years. So that's something to think about when you're out there looking. If don't think that just because you owned a home in the future and now that it's gone, that you're not able to utilize these programs. So next screen, please. And I think the next screen is our renovation loan.
Is that MI plus?
Oh, I'm sorry. Thank you. MI plus. I'm sorry. So MI plus. Now, one of the things that's happened, and of course everybody is aware of it, which is why we're doing these virtual classes, which is great. I think it's really wonderful for all of us to be able to reach out and touch everyone And again, it's just a great program for the Treasurer's Office and the Office of Economic Empowerment to do this. Is that when this pandemic started, we had individuals who currently own homes or are in the process of purchasing a home and are very concerned about, okay, now what happens? I just closed on my home last week, and now I'm hearing that I may not be working, or I can't go to work. My employer is sending me a letter saying that they're cutting, we're going to be put on furlough. Or you own a home through MassHousing or any other organization, any other lender, and all of a sudden now you're going, okay, how am I going to pay this mortgage for the next 3 months? And I've been given a forbearance. Great, I've been given a forbearance. Forbearance is not forgiveness. So I've been given a forbearance, which means that I don't have to come up with, the $2,000 a month over the next 3 months. But what happens at the end of that 3 months? I've got to come up with now, say, that $6,000. And if I haven't been working, well, where am I going to come up with that? Maybe you have savings. Maybe you've got a nice relative who's willing to help out. Maybe your employer is helping out a bit. But what if you don't have any of those? Well, with MassHousing, we have something that no other organization has to the level that MassHousing offers anywhere in the country. It's called MI Plus, which is mortgage insurance. Now, the premise behind mortgage insurance, and this goes back 50 years, back to the days where if you were a first-time home buyer, there weren't a lot of funds that were available for first-time home buyers. And not a lot of people had 20% down to put down on a home, even though in the case of my parents, their first home in 1968 was $16,500. So you said, oh, $16,500, that's great. I can put down, that's a car now. But back in the day, $16,500 and coming up with 20% of that, that's $3,200. That's what an automobile cost back in the late 1960s. So it was expensive, and first-time home buyers, it was very difficult for them to come up with the resources. And there were a lot of programs, and the programs that were offered were so limited that people literally camped outside the banks and waited to get into a first-time home buyer program. And once the funds were gone, that was it. You had to wait for the next cycle. So MI Plus broke that cycle. And what MI Plus allows home buyers to do is put down less than 20%. And it allows the risk to be moved from the lender and from the borrower to a third party, mortgage insurance company. So you buy a home, you put down 3%, you don't have the 20%. So where's that extra 17% coming from? Well, the mortgage insurance covers that, eliminates some of the risk, and allows the lender to make the loan. Well, MassHousing has its own mortgage insurance company. We have our own insurance company. So because it's our own, we're able to offer some flexibilities that some other agencies don't, which is MI Plus. So now I'm getting back to the pandemic. We're in the pandemic. We have people who have just closed loans with MassHousing. We have people who have mortgages with MassHousing. And remember, your loan, you go to a lender, they do all the paperwork, we pay them a fee, your loan comes to MassHousing, and you work with us. You contact us. You're working with an agency that's in Massachusetts. Your loan is with us, and all of a sudden you go, hey, Angelo, I just lost my job. And I know I have forbearance for 3 months, but what's going to happen at the end of the 3 months? Well, how am I going to come up with $6,000? Well, if you have a loan with MassHousing, not only do you have discounted fees for the mortgage insurance, we have something called MI Plus. We will pay your mortgage up to $2,000 a month, principal and interest, and we'll do it up to $12,000. So MI Plus will pay your mortgage up to $2,000 of principal and interest, and we'll do it for 6 months. So for those folks who had a mortgage with us or have a mortgage with us, and say we'll pay up to $2,000 a month, and say that principal and interest was $1,500. So MassHousing is covering, so that's $4,500. That's $4,500 that family does not have to be concerned about because they don't pay it back. You do not pay this back. And so now they can take those resources that they thought they were going to be using and they can use them elsewhere. Now, this program runs for about 10 years, and it runs for 10 years because the assumption in the past is that your equity needed to build up within over a 10-year span. It's prorated, and the prorated is based on if you have two individuals and one person is working, then we're going to pay the portion of the person who's unemployed. But it can be used over and over again over a 10-year span. So if you use 3 months now and then everything is okay, 5 years from now you're unemployed again, you still have 3 months left. Say you use 2, okay, you still have 1 month left. But the most important thing to remember is that you do not pay it back. And we've been able to help we've helped well over, I used to say 1,000 families. That number has been blown out of the water due to the pandemic. But we have been able to help people sustain home ownership, stay in their home, keep families together, keep neighborhoods viable with this particular product. We're the only ones that have this, only organization that offers this product at this level in the country. Next slide, please. So I started to talk a little bit about the renovation loan. And again, when you're a first-time home buyer, you're going out there to buy a home that may need work. We don't see as many of them these days, although we probably will see more now because of the affordability. People now are going to say, well, you know what, I wanted a 4-bedroom home and 1.5 baths, but I found a home with 1 bath and 3 bedrooms or 2 bedrooms. But I think we can turn the den into a bedroom, or I think we can expand the bathroom and make it a full bath. Or the plumbing is old. The electric needs to be upgraded. It needs a new roof. It needs new windows. Well, we have a renovation loan available so that you can go into the process, still purchase a single family, a condominium, a 2, 3, or 4 family, and purchase a home, and over a 6-month period, utilize the resources in order to rebuild that home. Now, the minimum loan is $10,000. So the minimum loan is $10,000. But think about what you could do with $10,000. You can upgrade that bathroom, put on that new roof, and the renovation loan can be used for lead paint. So if you're buying an older home, that's maybe older than 1976, 1977, then you need to abate lead. You can utilize this product. Maybe you're buying a home out in the burbs and it has a septic system, and then maybe a Title V issue that the home inspector came up with, and they brought them out and they said, oh, well, your septic system is going to fail. That's going to cost you between $15,000 and $25,000 or maybe $30,000. You can use the renovation loan in order to remediate those issues. Or mold. You're in one of those areas where they've had some flooding and now there's mold. You can use it for that. So you have up to 6 months to do the work. You must use a licensed contractor, and even if you are a licensed contractor, you cannot do the work yourself. And you have to be willing to do a little bit of legwork, because renovation loans, it's not like what you see on television with the DIY and do it yourself. You really have to understand what the process is. You have to work with a lender who understands the process, and you also have to work with a contractor who understands the process, because the contractor doesn't get his or her funds up front. They get their money as they complete the work. So it's a big difference than your standard program. So they have to really be prepared for that. But remember, it can be a really good option if you're looking to do some renovations on a home that needs some work. Next slide, please. And I believe the next slide is our second mortgage. Am I correct? Is that the second mortgage program?
Sorry, I had to unmute.
Oh, we can help. This is the second mortgage program. Get the let out.
This is how to apply.
Oh, this is how to apply. Okay.
And
So,
Angelo, if you can, could you speak a little closer to the mic? Some folks are having a little bit of a hard time hearing you.
okay, you know what? Okay, not a problem.
Thank you.
Okay. All right. Can you hear me better now?
Yes.
Okay. Thank you. All right. So, how do you apply? And I mentioned earlier that we have a lot of partners that we work with. There are nonprofit partners, and whether you're using a mass housing loan or whether you're looking to use any other kind of loan, you can certainly utilize these counseling agencies, these nonprofit agencies across the state. You can certainly utilize them with your if you're thinking about purchasing a home. They're great. Many of them offer their services for free or very minimal charge. So think about them, and when you're considering buying a home. We have lenders, and remember, we're a quasi-public agency, so you cannot come directly to MassHousing. You do have to utilize one of our 140 odd lenders that are out there. These are listed on the website, and we do actually have our lenders categorized. Some of our top lenders as platinum, gold, bronze, and silver. And so these are lenders who do a lot of work with MassHousing. And if you need a reference or a referral, you can certainly reach out to myself or to the MassHousing relationship manager team, and we can assist you there. So you do have to sit down with the loan officer, and he or she is going to go into a lot of detail, a lot more detail than I've done in the last 45 minutes. They will describe the product. They will tell you in detail how the product works. And you may sit down with the loan officer, but always remember, regardless of whether it's a MassHousing or any other loan officer that you might be working with, we want you to be educated. So when you sit down, you are making the decision on what type of loan product you want. So you may go in saying, well, I want product A, and that's great if it works for you, but you may have a better product than product B. But it's all about educating you, and so that when you go in, you're able to assist that loan officer in helping you make the best decision for you and for your family. So you can go to masshousing.com and click on the lender list and locate a lender, and then interview that lender. Interview that lender so that that you're able to help that lender help you. Next slide, please. And I think this is the slide which is we can help after closing. Am I correct?
This is we can still help after closing.
Yes. Okay, great. So we can still help after closing. And after you buy your home, and I talked a little bit about mold and lead and some of the other issues, but you may decide, regardless of who your loan is with, that you may buy the home. And I can tell you what happened with my first home is I bought my first home, and 2 months afterwards, my water heater went. And even the home inspector was working fine. When the home inspector was there, it was producing hot water. There was no problem at all. But a couple of months later, the water heater went. And luckily it was in the summer, because the water heater goes in the winter, cold showers and all kinds of other issues. But I had to put in a new water heater. Now, this happened many years ago, and it was a $700 fix. Now, $700 these days may not sound like a lot of money, but this was $700 back in 1985. $700 was just shy of what our mortgage payment was. So that was a big hit. But if you have those types of issues and you're in the home and you find that there are some issues that you want to try and repair or take care of and resolve, then we have a loan process that will allow you to do so. But also, There are other lenders that are out there. There are products called home equity loans that will allow you to use the equity in your home. Be very, very, very cautious. If you're going to use the equity in your home should not be an ATM. It should not be an ATM. But you're able to do that. And the next slide, please. And I think this is the last slide.
I believe so. It's connect with us.
Yeah. So you can find us on Facebook. You can find us on YouTube, LinkedIn, and Twitter. You have the opportunity to reach out to myself and certainly our team that can assist you. A couple of things that I want to talk about before we get into a Q&A, though, is some of the links that we've sent you. One of them is our website, which is MassHousing.com, and please check out the website. There's a lot of information there. Another website is My Mass Mortgage, mymassmortgage.org. My Mass Mortgage came about in a collaboration with CHAPA and the MassHousing Partnership, which is kind of our sister agency, and they also assist individuals in purchasing their first home. And it's a great loan if you qualify for it. They have certain qualification guidelines. MassHousing's have a little bit higher income guidelines, so that we have a niche that we work with. But mymassmortgage.org is a website that has some resources, has some tools, so please check that out. CHAPA.org, I mentioned them earlier and talked about the resource of finding a first-time homebuyer class across the state. We aren't doing face-to-face classes right now. The classes are virtual, but whether you're doing a virtual class whether you want to do a landlord class, they list many of the nonprofits across the state that you can reach out to. They also have a list of affordable properties. And earlier I mentioned lottery properties and affordable properties. These are deed restricted properties. They have a list of those across the state. And then if you're in the Boston area, please check out the Home Center or the Metro list, which also list properties that are available within the city of Boston. Another link is for credit report. Annualcreditreport.com. Annualcreditreport.com. This is a site where you can go out and you can get your credit report free. Every year, you can pull your 3 credit reports for free. And what we suggest everyone to do is there's Equifax, Experian, and TransUnion. And what I suggest doing is maybe pulling a credit report from one of the bureaus, the first quarter of the month, a second one from the third, and then the last one at the end of the year, so that you're covered your whole year. They're free. So that's a great site to go to, annualcreditreport.com. Now, annualcreditreport.com does not give you your FICO score. And FICO score, you probably have heard people say, well, what's FICO score? Well, all FICO means is Fair Isaac Company. They're the company that put together the algorithm that predicts risk and whether or not you're going to pay your mortgage. So what does that mean? Well, most mortgage companies, most lenders use Fair Isaac or FICO score. If you want to get your FICO score, you're going to have to pay for it. Website is myfico.com, myfico.com, and you can, some people will sign up for it so that they get it every month, or you can do a one-time sign up and just get your FICO score so you know where you are. But you will need to get your FICO score. That's what the majority of lenders use, and utilizing some of the other scores may not be as helpful. So myfico.com is a great place to go for that. So now what I'd like to do is open up for any questions, and we can take it from there.
We do have, looks like 2 questions. Um, the first one is, do you think working with a credit repair company that says it will pay off your debt in one lump sum? I'm guessing, what do you think about that?
Well, credit. So if you're working with a credit repair company, there are several of the nonprofits across the state, and you can either go to our website or you can check out. You can go to CHAPA.org's website, and it lists a lot of the counseling agencies that can help you with credit repair and specifically targeting purchasing a home if that's what you want to do. So the problem with it, or not problem, but the issue with credit repair is that you have to have a plan. And sometimes just paying off your credit isn't necessarily going to help you. Meaning, if they say, "Oh well, you know, I've got some issues with my credit. I've got some money that may be a relative, or I've got something saved. I'm just going to pay off this debt and I'll be okay." Well, no, just paying off that debt may not change your credit score right away, which is what we're going to be using, what we're going to be looking at. And we pull 3 credit scores, and we use the middle one. So don't just run into a credit repair company paying a fee and having them just pay off the debt without having a plan in place, because it may actually not help you short term. It may hurt you. So really talk about what your plan is before you just run in and pay off debt. Because, for instance, if you have a car loan and you have fewer than 12 payments left, some people will say, you know what? I'm just going to run in, I'm just going to pay that off. Well, if you have fewer than 12 payments left, it may not affect your overall underwriting guidelines on your mortgage. And so now that's money that you can use as a resource for possibly a down payment or closing costs, rather than paying off a loan that you didn't need to pay off.
Speaking of credit scores, we have a question. It says FICO scores. How do you increase it?
So your FICO score is made up of several factors. 2 of the larger ones are how long you've had credit and how much credit you're using. So the best way to increase it is don't pay off a credit card or a loan and then close out the account, because longevity is one of the biggest portions of what your FICO score is based on. So if you've got, so the best way to increase it is to keep the old credit out there and pay it off as quickly as you can, and don't get your credit balance under 50%. So if you've got a credit card for $5,000 and you're running a balance of say $4,000, then that's going to negatively affect your credit score. If you can get that balance down under 50%, so under that 2,500 mark, say get it down to 2,400 or 2,000, that's going to help your credit score. The other thing to do these are still out there, is if you have no credit, get a telephone. If you have no credit, then you've got to establish something. That cell phone that was in your parents' name, get your own cell phone. If you're paying rent and you've been paying cash, pay it with a check, pay it with the money order. Get a secured credit card. You put down $500 and they give you a credit card for $500 or for $300, and use that credit card and pay it back, use it and pay it back. So keeping your balances under 50%, keeping accounts open, and of course, making sure that you pay early, pay more. Don't pay the minimum amount, because if you're paying the minimum amount, 1, it's going to cost you more, and 2, it's really not helping your credit score.
Thank you. And another question, does MassHousing work with people who have ITINs? If not, do you know of programs I could look into?
Oh, sure. Yeah. So as long as you've got the income, and as long as you've got the working verifications and documentation, we will work with you.
And another question, how much should someone make roughly for a starter home for a first-time buyer? How much is a realistic mortgage for a modest salary of, say, $35,000 to $40,000?
So that's a very difficult question to answer, but this is how I can answer it. If you're making in that range and you can find an affordable unit, maybe a condominium or a single family home, that is being kept affordable, because there are affordable units out there that have income limits that might be at 40 or 60% of area median income, which could be in that range. But you're going to be restricted on where you can buy, and you're going to be restricted on the type of property that it might be. So realistically, are there options in that income? Yes, depending on where you want to live, because there are still properties, depending on where you want to live. I'll give you an example. If you want to live out in the western part of the state, there's still properties that are selling for $150,000, $250,000 or even less. There are condominiums that are out there. So it depends. That's a big depends if you're talking $35,000 to $40,000, or maybe you have someone who wants to give you a lot of money, and then it doesn't matter what your mortgage is, because if somebody's willing to give you $100,000, say, and that helps you push your mortgage down to where you can afford it, then that works.
And that looks like that's it for all of our questions. I don't know if there's any last minute questions from our attendees. It is 12:56, so we do have 4 minutes if anybody else wants to drop a question. You will have a couple minutes as I put up our exit poll. The exit poll is a survey-esque type question. It's only 3 questions. If you would please, before you exit, be sure to fill out this exit poll. It would help us on our future money talks. And while folks are doing that, I'm going to say thank you so much to Angelo. Thank you for taking some time and going over all of these wonderful resources and products. I heard a lot of things that I'm going to follow up on myself. And if you do have any questions, I dropped Angelo's email into the chat. You can email him directly. You can also go to MassHousing.com and contact somebody that might be closer to you. And then also look out for a follow-up email from us. We're going to make sure that we share the link to this recording and all of the links that we talked about. And then if you want that slide deck, you can contact us, either Angelo or myself, at moneytalk@tre.state.ma.us. Again, just a reminder, folks, thank you so much for joining us. Thank you, Angelo. And fill out that exit poll before you click out. There is also a survey that will be released, but if you fill out this exit poll, you don't have to do the survey. So thank you. Thank you again, million times, Angelo. Thank you so much. And I hope you all have a wonderful day.
And thank you, everyone. This was great. Thanks to the Treasurer's Office. This is a great way for us to start the buying season again. It never really ended, but good luck to everyone out there.
Awesome. Thank you all.